Hello YouTube, it's Nikhil Roby Coleman. I'm here with Tempo Financing, and on this channel we teach you guys how to get rid of debt. So for this lesson, we're going to talk about refinancing. And I get questions from my clients. I get questions from just randoms because they know that I'm into finance, and they ask me, Nikhil, what about a refinance? What should I do? Should I refinance or should I not? So the main question is, should I refinance? Right? So we're going to get right into it. This is an easy answer. No, you shouldn't refinance. Why shouldn't you refinance? You shouldn't refinance because as soon as you refinance, you are resetting the loan. What does resetting the loan mean? Resetting the loan means after you bought the house for a certain price. Well, first let's back up. Let's just say right now, real estate only appreciates. Real estate only increases. The value of real estate only increases. Value of real estate don't decrease. Real estate is nothing like a car. It's nothing like it's nothing like uh, any other thing that you acquire when it comes to materials. Uh, Land, real estate. Once you acquire it, the value goes up. No matter if it goes up every 4 years, 3 years, 5 years, 10 years, 15 years. The case in point is real estate all go up. It only increases in value. So, with that being said, it brings me to my main point. No, you should not refinance because you are resetting the loan. When you reset a loan, if you bought a house, right? Let's just go ahead and get to the main example. When you buy a house, right? For instance, we're going back to our $400,000 example. So when you buy a house for 500,000, right? And 5 years later, you bought a house for 400,000. I'm sorry, excuse me. You bought a house for 400,000. 5 years later, the house is 500,000, right? Soon as you reset the loan after 5 years, so you don't put five years, so you actually have 25 years left on your mortgage, right? But when you refinance, you reset it back to 30. Soon as you refinance and go through with a refinance of your home, you automatically reset that loan back to 30 years again. That's why I say no. Because now you have to do the amortized schedule all over again, which is 30 years amortized schedule. That's why we don't want our clients getting into mortgages, because when you refi in a mortgage, you're resetting your time, right? You're adding more money. You're giving more money to the banks, right? So, which brings me to my next point. Listen, banks want you to refinance because it increases the loan, the interest payments, and it reset time. Right? That's why a refinance is bad. That's why a refinance is not good, because of that reason. If a refinance was good when it came to a loan, right? If if it was good. I can't even say nothing good about refinancing in a loan because there's nothing good to say about it. So I can't even give a scenario if it was good, right? So you just don't refinance at all, right? You don't refinance it. You don't refinance your home, because that brings me to my next point. When you refinance a home, let's get into it. When you refinance a home, the banks do appraisal for the new value, which brings me to my next point. If the house is $400,000, 5 years later it's at $500,000. This is just an example. is at $500,000. The new loan is set at $500,000, which is at a seven, for example, 7%, another 30 years. So you just added another 30. You just added 30 years for a $500,000 loan, which is going to increase the interest payments and reset your time. So you just put yourself in a deeper hole. That's what refinancing means. It's just a fancy way to say you're digging deeper into your hole. You're digging deeper into your debt. That's all you're doing is digging deeper and digging deeper into your debt, digging deeper, right? But they're reversing it on you, right? Because the value of your home is continuously go up. So this is how they get you. So when you're making the payments on your home, right? It's only been 2 or 3 years. After 3 or 4 years, they already asking you to refinance, right? They're asking you to reset the loan at a higher loan because the value of your home goes up. So they're like, oh, refinance, you get more money out for a cash refinance. So we'll give you cash, right? We'll give you cash for you to refinance. When you only get a little bit of cash for the refinance, but you won't forget that my mortgage loan has went up $100,000. So now when you see that bigger payment, right? When you see that bigger payment, it's coming from that because you have reset the loan. I hope this makes sense to you guys. I hope this lesson makes sense to you for anybody that's thinking about refinancing or anybody that have refinanced. If you're thinking about refinancing, whatever the case may be, do not refinance anymore if you have already, and don't refinance now if you're thinking about it. Don't refinance. Don't do that. There's a better solution to it, and I'm gonna give it to you at the end of this video. So you don't refinance because you are resetting the whole loan. You're resetting your time, right? And you're taking on higher interest payments, right? And you already know what an amortized schedule would do to interest payments. They split up the interest payments. So most of the interest payment, the bulk of that interest payment is going to go to the bank's pocket, and the rest is going to the actual debt of what you borrowed. So you're losing, and you get more in debt. So you're losing because you're on an amortized schedule. The amortized schedule is literally killing everybody. It's a silent killer. Amortized schedule is killing everybody. And when you refinance, you're just resetting your amortized schedule. That's it. A mortgage loan is a amortized schedule. And when you do that, you're just resetting your amortized schedule. You're resetting it. So, for instance, you got year 1 to year 30, right? You got year 1 to year 30. In this example, you went from year 1 to year 5, right? And then you refinanced. Right? So now you go back to year 1 and then go to year 30. And what's interesting is the banks, once you get to year 5, 10, 15, 20, once you get here again, they're going to tell you to refinance again. And then you're going to go back, right? And they're going to tell you, you're going to go here and say you wait longer. You might refinance at year 10. You're going to go back, reset, and then you might go to year 15 and refinance. Going to go back. Depends on what happened to the market, right? So if you at a 7%, right? If you at a 7% and the market go down, right? And the market go down 4%, right? You're gonna do a refi because you think your payment you're gonna do a refi because now you're gonna reset your loan, and your loan will be reset at 4%, right? But you still think you winning because it's going from 7 to 4, but you're still getting scammed. What I told you, 4 you're paying 80%, 7 you're paying 140%. So regardless, you're still getting scammed. But in your eyes, right, to your knowledge and to your understanding, you think you winning when you do a refinance because the interest rate dropped from 7 to 4%. No, just because the interest rate dropped from 7 to 4% doesn't mean that you're winning. You're still losing. You're still losing. You're not winning. That's what the banks want you to think. The banks want you to think that you're winning. So let's say after let's not deal with the value. Let's deal with just the interest, right? So let's say you get a home, you purchase a home for 400,000 with a 6% interest rate, right? 5 years later, interest rates drop. The economy the economy something happened to the economy. The interest rate dropped to 3%. Now you like, okay, I'm gonna refinance and I'm gonna reset my mortgage loan at 3% instead of 6%. Right? I'm gonna do a cash out refinance. I'm gonna take some cash out. I'm gonna reset my loan at 3%, and life is gonna be great. No, when you do that, now you just went 6%. You just went to 120% total interest to now 60% total interest. So you're still losing. You're just not losing more than you was losing before, but you're still a loser in this example because you think that you're winning. I don't think that you're a loser, so don't get me twisted. I don't think that you're a loser, but the mind frame, the mindset that you have, you think you're winning, but you're just a loser because you're already a loser because you're already in a mortgage. That's what makes you a loser off the rip. But now you're so deep into the losing mentality that you think that when interest rate drop, you think you're going to be winning when you're just losing a little bit less than you was losing before. That's it. So if you think that you're winning because you have a low interest rate on a mortgage loan, you're sadly mistaken. You're still losing. You're just not losing as much as you're losing before, but you're still losing. I'm going to teach you, or I'm going to show you how to get in the winners column. But right now, if you have a mortgage, or if you're trying to refinance, or if you have refinance, you are a loser. How do you know that? Because guess what? I was in that predicament. Me. Then I already lived it. Sorry. I was a loser. Yeah, I was a loser too. I educated myself to put myself in the winner column. So now that's why I can tell you you're losing. You can sit here and try to convince yourself that you're winning, but that's what you think. That's what you think. Like, I got them. I got them. They're a sucker. They my sucker, but you still the sucker. You still the sucker because the reason why you still the sucker is you still are in the amortized schedule. That's why you're a sucker. Okay. Now, let's get in. Let me tell you how to get in the winners column. You get in the winners column by getting a HELOC. And with the HELOC, your equity is liquid, but not with a mortgage. So, case in point, instead of getting a mortgage, you convert your mortgage into a home equity line of credit. Now you are in the winners column, right? Rather if it's a first lien HELOC or second lien HELOC. Now you put yourself in the winners column. Now you in the winners column. Now you eating now. Now you getting revenge back on the bank. Now you're spending less money, right? Of on interest payments, you're saving money, you're saving time, all of that. You're doing all of that. Now you're in the winners column, right? So in the equity that's in your home, in this case, From 400,000 to 500,000, that's $100,000. That's $100,000 of equity. But you can't touch that equity unless you refinance. You have to reset the mortgage in order to touch your equity. Not with a HELOC. Your equity is liquid. Man, this is beautiful. Your equity is liquid. You don't have to reset and get a whole new loan just to get access to your equity. You can, with a HELOC, you can get access to your equity immediately. And then after you get the HELOC, after you get a HELOC, after you get the HELOC, then you refinance the HELOC. So you can, now you got more access to your equity immediately when the value of the home go up. So when the value of the home go up with a HELOC, it's different than with a mortgage. When the value of the home go in the HELOC, you can refinance the HELOC. Once you refinance the HELOC, that equity that's liquid, that you have immediate access to, you'll have more immediate access to at that time when you get the refinance for the HELOC. With a mortgage loan, you will have to literally reset the whole mortgage loan. You have a new payment. You'll have a new interest rate. You'll have a new a new set of time. With a HELOC, no, it don't work like that. The value just go up. The only thing that'll probably get reset is your interest rate. As far as time and interest payments, none of that truly changed because it's a revolving line of credit. It's a revolving line of credit, so it don't that system, a HELOC system, don't work like a mortgage loan system. So that's all that I have for you for this video. I thank you guys for listening. Stay tuned in, stay locked in, stay tapped in, and continue to look at these videos, replay them, meditate on these videos, and put yourself in your situation, put yourself in your own situation, and apply it to what's being taught or what's being the content that's being made to educate you guys. That's all that I have. Have a blessed day and keep going. Keep being great.